As our Guelph real estate market begins to naturally cool, the big question is, will the proposed changes by the federal government drive our market to a complete halt? Yes, our market is starting to cool, but we're still in an extremely strong seller's market, and we're anticipating that we're going to remain in a strong seller's market for the next several months. On April 7th, the Fed did announce several initiatives to increase housing supply, help first-time buyers, and reduce the investor market. The average sale price in Guelph was just over $969,000, which is up 1% from February. It's also up 30% year over year. Currently, 87% of the homes that sell are going to multiple offers, so that's down from 93% that we had in February. And we're seeing on average houses sell for 14% above their list price, which is down about 5% from the month prior. The large reason for this is we did notice a lot more inventory come on the market. There were 24% more new listings to hit the market. That's good news for buyers because it does mean that there's more selection. Interest rates are going up. There's no arguing that. The supply chain has gotten worse, not better, and inflation is continuing to spiral out of control. On April 13th, a lot of our analysts and banks are predicting that we're going to see a 50 basis point increase in interest rates, which is higher than what we were initially predicting. We'll probably continue to see interest rates increase throughout the year as we combat inflation. It wouldn't be surprising for us to see a prime rate of 2.25 to 2.75 by the end of the year. Although this would be a massive increase within a one-year period, historically that rate would still be very low. The government's budget had several initiatives that should impact housing affordability. So $10 billion towards new housing starts, $4 billion towards the municipalities to speed up the approval process, plus they're extending several of their existing initiatives. For first-time buyers, is a new tax-free first-time buyers home credit where up to $40,000 of tax-free money can be used towards your down payment, very similar to what you can do with an RRSP. They've also increased the first-time buyers land transfer credit up to $10,000, as well as they're implementing some rent-to-own initiatives as well to help renters get into the market. To slow down the investor market, they're proposing a 2-year ban on foreign ownership with the exemption of students coming to Canada who are planning to stay and work on a visa. They're also introducing an anti-flip tax where if you buy and sell a house within 1 year, unless you have a good reason, they're going to be taxing you. And then they're trying to get rid of blind bidding as well. So the big question is this going to shut down the real estate market and cause housing prices to drop? My answer is no, at least not significantly. Demand is far outpacing supply, and that's not something we can solve overnight. We can work towards increasing our supply, but that's going to take several years. And Trudeau has committed to increasing immigration to higher levels than we've ever had in Canada's history, which is in turn is going to put more pressure on the Canadian housing supply. In the meantime, as our market changes, sellers are going to have to adjust their expectations. Your home may not go as high over list, or it may not even go to multiple offers depending on the type of property you have. Days on market are increasing. However, houses are still selling for fantastic prices right now. For buyers, there's a bit of a silver lining right now. You can find houses where you don't necessarily have to go into competition to buy them. As of April 7th, there were 42 houses on the market in Guelph that have been on the market for at least 7 days or more. So these are the houses to look at if you don't want to go into competition. We're also starting to see the return of home inspection and financing conditions for houses where they're not going to competition. By putting these conditions in your offer, you can protect yourself as a buyer. If you're looking to buy this year, I'd recommend you do it sooner rather than later, as this is the lowest we're going to see interest rates for probably quite a while. I'm Brad Wild from Go Wild Real Estate, a group of professionals that are passionate about helping people grow their wealth through real estate.